What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So a lot of you guys have requested bond ETFs and covered call ETFs. And I will reveal to you guys three very popular bond ETFs for dividend income. I'm going to explain to you why covered call ETFs are more beneficial versus bond ETFs when it comes to dividend income, but bond ETFs are beneficial to some people in the long run. So I'll explain to you guys why they're also beneficial to you guys as dividend investors. So tomorrow I will post a video and reveal to you a fractional share dividend portfolio that you guys can implement if you're interested with a dividend investing strategy. And it ties in some of the videos that I've had recently and combining it into one with a fractional share dividend portfolio on M1 Finance. So let's check out these ETFs right now. So the first ETF I would like to discuss is the Spdr Bloomberg High Yield Bond ETF. JNK is a symbol. It's sitting at 175. Its previous close was 101.55. Its day range was 170 to 101.80. Its year range was 170 to 110.14. The market cap was 9.46 billion US dollars. So the thing with these guys, okay, this is a popular bond ETF that people use for dividend income. So you notice the day range and the year range. It's not jumping up too much or too little. And a lot of people have these in their retirement accounts. And the reason being is, you know, when you retire, you want to be a little bit more conservative versus having VTI and all those. But I like Vanguard, VTI, and a lot of these other ETFs. Actually, my mutual fund with my employer is the total stock market Admiral shares. So I'm going to just load up on that. I mean, it's a beautiful mutual fund by Vanguard. So let's go over the dividend history of JNK. So JNK, the Spdr Bloomberg High Yield Bond ETF, is 175. So here's the thing. Look at the trends. This is a dividend yield of 4.51%. Not the best when it comes to dividend income for a monthly dividend ETF, especially a bond. So look at this. So it's 175, and you're getting a range of 47 cents, 49 cents, 51 maybe at best, 38 cents, 37 cents, 40 cents. It's sitting at 175 with a dividend yield of 4.51%. So let's go over this one more time. You're getting a range, ooh, look at this, 2018, you're getting 17 cents, 51 cents, 49. So let's just say in the 30s to 40s, you're getting that, and it's sitting at 175. And it's not jumping up. It's not going to beat the S&P. This is a bond. So it distributes a monthly dividend, and that's what you're getting out of it. So I'm going to jump to another very popular bond ETF. And that ETF is the Vanguard Total Bond Stock Market Index Fund ETF. It's sitting at 80.37. BND is a symbol. Its previous close was 80.43. Day range was 80.33 to 80.49. Year range was 80.29 to 87.08 with a volume of 7.22 million US dollars. So again, it's not going to beat the S&P. At one point, the S&P looked like it took a hit, but it's not going to catch up and compete with it. This is a very popular Vanguard ETF that people own. Some people like it for dividend income. Some people like it for their retirement account. So let's jump to the dividend history of BND ETF. So here's the range of these guys. Let's just look at 2019. 19 cents, 17 cents, 16 cents, 15 cents, 29 cents. It was very attractive. Then it's back to 13, 14. Okay, you got lucky with 27 cents. It has a dividend yield of 1.93%, and it's sitting at 80.37 with an annual dividend of 154. So income-wise, 80.37, and you're getting 13 cents, 12 cents. It's not something that I like for dividend income or passive income. It's not very attractive for me. Now, the positives with bonds are the stock market takes a hit, they really don't drop that much in price per share. And that's why a lot of people, when they retire, they stick with bonds and they move their stocks into bonds just to be conservative with money. But for somebody like me, with my 401k, 403b, or mutual fund, I don't really care about bonds. I don't own any bonds. I don't rely on bonds for dividend income. I don't own any bonds, and I don't see any reason why. And I'm going to jump to the last bond ETF that's very popular. This one people do have in their portfolios. A lot of people like this bond ETF in their Acorns account or their Acorns portfolio. Let's check this one out. So right here, the next one is LQD iShares iBoxx investment grade corporate bond ETF. This is a very popular one that people own in their portfolios. The previous close was 120.23. The day range is 120.07 to 120.42. Year range is 119.79 to 136.78. Market cap is 32.80 billion US dollars. So this one in Acorns, people really praise. I read this in the forums. Oh, it's great for income and passive income. I'm going to show you the Globalx covered call ETFs and why they run circles around these three bond ETFs. So let's check these guys out. Now, in the next week or so, I'm going to reveal to you some cons about the Globalx covered call ETFs. But for income, I absolutely love these ones. Look at this. This is sitting at 1945. Now, the expense ratio of these covered call ETFs, these three of them, is 0.60 to about 0.70 expense ratio. It's not too bad. But when you see the income with these guys, especially QYLD, which is, again, not going to beat the S&P, but this one is pretty attractive right now. I absolutely love these guys, and I have them in my fractional share dividend portfolio, and I'm explaining to you why. So right now it's sitting at 1945. Previous close was 1978. Its day range is 1941 to 1997. Its year range is 18.93 to 23.15. So volatility, it's a little bit more volatile with JNK bond, BND bond, and ETF, and LQD ETF. But let me show you the dividend history of QYLD. And this is why I absolutely love QYLD as a source of high yield dividend ETFs, as well as an excellent source of passive income with monthly income. Okay, so look at this. They use covered call options. So the worst I saw was 13 cents right here in 2017, 13, 14, 15. But you're getting, at best, 24 cents. Now, there was a rare one right here that was 49 cents. You're not always going to get that. So you're going to get around, let's just say at worst, 17 cents right here to about 22, 23 cents at best. And it's sitting at 19.45 with a dividend yield of 12.26%. Annual dividend is 242. So when it comes to income, and this is why I like these guys with my M1 Finance dividend portfolio and fractional shares, my goal is to earn $1,000 to $3,000 a month my monthly dividends and $2,000 to $4,000 a month my quarterly dividends. JNK, BND, and LQD are not going to be getting me there that fast. When I got somebody like this that is distributing dividend income at 20 cents, it's already running circles, and it's $19.45. And I'm going to jump to RYLD real quick. Here's another one, Globalx Russell 2000 covered call ETF, which I'm going to just show you a quick comparison of QYLD versus RYLD. It's sitting at 23.04. Its previous close was 23.25. Its year range is 23.01 to 23.33. Its year range is 21.66 to 25.82. So again, this is not going to beat the S&P. So I'm just letting you know, this is not going to compete against the S&P. And I'll say it one more time. It is not going to compete against the S&P. So this is a dividend, high yield dividend. Well, it's not really dividend because it goes by covered calls, and you're getting money on covered called options play. And these guys are doing the job for you, which makes life easier because I'm busy with graduate school. I don't got time to do options, and options are really risky. And that's something that you really need to master over time before you start jumping into options plays. So let's jump to the dividend history of RYLD. So RYLD, Globalx, Russell 2000 covered call ETF is sitting at 2304. So at worst, you're going to get 13 cents. At best, you're going to get about 25 cents. But look at the range of how these guys have done. So they're consistently in the 20 cents range. Okay. Let's just say at worst, 15, even though like it looks like 18 and 19 is like the worst that it's been recently since 2020. So right here, 23 cents, 25 cents, 24 cents, right around that. And it's sitting at 2304. That is a high yield dividend covered call ETF right there, which is more than 10% of a dividend yield. That's what I like about these guys, and that's what I like about dividend income. Again, I will get a lot faster to earning $100 with these guys than I will with JNK, BND, and LQD. So let's jump to the final one, which is XYLD. And here's XYLD, Globalx S&P 500 covered call ETF. It's sitting at 47.10. Its previous close was 47.63. Its day range was 47.10 to 47.85. Its year range was 45.85 to 51.16. So again, you're not going to beat the S&P. These covered call ETFs are not going to beat the S&P. These bond ETFs are not going to beat the S&P. So some of their growth funds, their growth ETFs, and their VNQ ETF, and those are going to beat or compete with the S&P. So again, I'm not giving financial advice for entertainment purposes, only disclaimer in the description, but look at this monthly income that you can get with these covered call ETFs versus bond ETFs. Check out XYLD. Look at this range of XYLD. It's sitting at 47.10. At worst, you're going to get 21 cents. And then it's consistently in the high 30s and 40s. So at worst, it was 34 cents, let's just say, in 2021 in October. But it's consistently in the 40 cents range. And it's sitting at $47.10. So comparing the QYLD, RYLD, and XYLD to JNK, BND, and LQD, these guys run circles. These covered call ETFs run circles around these bond ETFs. Now, the one positive about bond ETFs is for security. When you retire, the volatility is not as bad versus if I put money in TQQQ or ARK. You know, it goes way up and down with the the ARK ETF and some of these very volatile ETFs. That's kind of for security. Now, when it comes to income or passive income and monthly dividend income or income, I like the real estate investment trusts and the covered call ETFs and JEPI and NUSI and Devo way better than the bond ETFs. And the other thing is even SPHD, which has a bad rap right now, it's not really a high dividend, low volatility ETF. If you study it, you're still at least getting some dividend hikes over time versus the stagnant bond ETFs. Let me know what you think of this video. Tomorrow, I will reveal to you a new dividend portfolio for you guys to check out. I have a replica of it, and it ties in everything that I've done these past few days, QYLD, RYLD, XYLD, some stocks to buy. And I'm going to add it all together and reveal it to you guys tomorrow. So you guys take care and have a good one.